Hi, everybody. Welcome to the October 2025 Economic and Market Update presented by Commonwealth Financial Network. My name is Chris Fasciano, and I am Commonwealth's Chief Market Strategist. September was another positive month for markets, as U.S. stocks gained on the back of continued growth and falling interest rates. The S&P 500, Dow, and Nasdaq all set new record highs during the month, which was especially impressive given the fact that September has historically been the worst month for investors. This now marks 5 straight months with positive returns for U.S. stocks, highlighting the strength of the current rally. The story was similar for international stocks as well, with both developed and emerging markets gaining for the month. Even bonds did well to finish out the quarter, as falling interest rates helped support bond prices for the second straight month. Short-term interest rates fell in September as the Federal Reserve resumed cutting rates at their mid-month meeting. This was widely anticipated by investors and economists and indicates a new phase in the Fed's attempt to normalize monetary policy. Going forward, markets expect to see 1 or 2 additional rate cuts by the end of the year. In general, falling interest rates tend to support stock and bond prices, so any further cuts would likely be seen as a boon for investors. Fundamental factors were also supportive of markets during the month. Second quarter earnings season wrapped in September, and results came in better than expected. We are also now seeing estimates for full year 2025 and 2026 move higher. Over the long run, fundamentals drive market performance, so this was an encouraging signal for investors. The economic updates released during the month were also broadly positive, with some caveats. Second quarter GDP growth was revised up from earlier estimates of 3.3% to 3.8%, driven by increased personal consumption growth. Consumer spending drives the majority of economic activity in the country, so this upwards revision was a good sign for the state of the overall economy. With that being said, there are some areas of concern to keep an eye on. First and foremost is the labor market, as we've seen a notable slowdown in hiring over the past few months. The August jobs report showed that just 22,000 jobs were added during the month, and downward revisions to prior months further depressed overall employment levels. While still low on a historical basis, the unemployment rate ticked up to its highest level since August of 2021. Aside from the weakening job market, there are other risks that investors should keep in mind as well. Domestically, political uncertainty rose recently due to an impasse in Congress over spending negotiations. This continues to highlight differences in spending priorities, which could lead to further policy uncertainty from Washington. Foreign geopolitical risks remain as well, as seen by the ongoing conflicts in Ukraine and the Middle East. Ultimately, though, on the whole, we remain in a pretty good place as we head into the fourth quarter. Market fundamentals and performance have remained healthy throughout the course of the year, despite high levels of uncertainty and shifting risks. While there are some areas to monitor, especially on the jobs front, the economic backdrop largely remains supportive, and the most likely path forward is for continued economic growth and market appreciation, even if we experience periods of short-term volatility. That's it for this month's update. I'll be back next month to walk through whatever the markets throw our way. Take care, and thanks as always for watching.